As we look at the market, mean reverting today, I look back to my 2010 strategy gap fill 1 from my book, 7 Trading Systems for the S&P Futures, to see what the latest results are. And the results, it was released in July of 2010, which is right here. And you can see the out-of-sample performance of this strategy. And so I have an update as well. I'm going to show you a 2019 update as well as a post-pandemic update for this strategy. And so the average trade profit is not as high as we would like. Low drawdown, good concept. You can test this on other markets as well. Good equity curve. This is without slippage and commission, so it's slightly profitable, but it's the concept we're interested in. And so I want to show you the 2019 update. And the 2019 update uses the advanced decline line. So we go over here and we have the 2019 update, and we're looking at the last few years, it's also profitable prior to that, but we're focusing on the last few years since it encompasses the pandemic and the extra volatility. So much lower drawdown, more selective trades. Average trade profit goes to 52.29, and here is the equity curve. It is making equity peaks. Once again, this does not include slippage and commission, but the average trade profit is slightly better. We're going to double that though, and I'm going to show you how to double that average trade profit, and I'm going to simply change the profit target. So when you go in and look at these strategies, it has a $500 stop loss, a $200 profit target. Those are fairly tight parameters, especially in 2022. These are the same parameters that were in 2010, and so a lot more volatility, much higher index levels. If we just simply double the profit target and keep the stop loss the same, you look at the exit time, that's not even a factor in this market. This market will either hit a stop loss or a profit target if it takes a trade at the opening much sooner than it would ever hit the exit time. And so let's take a look here at the results. And you see that the average trade profit goes to 119, 13,000 over a $1,600 drawdown, and you're still right at equity peaks. Yesterday, a $200 profit target would have worked better, but overall, a better strategy with this average trade profit and the current volatility levels. And again, this is the gap fill 1. I have this in my 7 Trading Systems for the S&P Futures book, and you can see right here what this book includes. It includes the gap fill 1 strategy originally released. The members area, if you update to the members area, the option to add the members area, we can download the software. You can also get the 2019 update. You can download that, change the profit target to $400, and I may add a 2022 update. Change the profit target on that to $400 and get these results for a gap fill 1 strategy that is hitting equity peaks today. It's hitting equity peaks, or it actually hit equity peaks on the 14th, and then it hit equity peaks yesterday with a $200 stop loss, so the original version. So that is the gap fill 1 2022, and the update in 2019 included the advanced decline line. I'm going to show you that. Advancers minus decliners. You can also use $ADD to cover both of those. And so I may have a 2022 update that I add to the members area. The members area, if you don't know, covers a code for all of these strategies. You can download all the strategies in the book for 7 Trading Systems for the S&P Futures. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.